What is going on, Outfitters? It's very tubular Tuesday today. Didn't really have any kind of significant gap on the market today, so pretty much flat open. Kind of chopped around there for the first few minutes, and then kind of a little bit drop off. We've been selling down for the past hour. Nothing crazy. Currently down about 1/4% there on the SPY. The Qs has been actually a little bit stronger, mostly because it just hasn't been as bearish. But pretty much flat open there. You can see it just kind of mostly been sideways. Kind of looks like a little double top kind of here. Possible head and shoulders price action. We'll see. I wouldn't be doing anything crazy off of that, but currently down about 0.15%. IWM, which has been running real hot recently, red hot, man. This thing's been smoking. Actually had a pretty good gap down today, down 0.7%. Actually gapped right at the low of this little lower wick back from yesterday morning. So right at the low of yesterday, you see the first 20 minutes, nice little bounce. It actually got even very briefly, and then it has pulled back. And as that session lows right now, currently down a little bit over 1%. The DIA actually had a little bit of a gap up, traded higher and pulled back. Okay, currently down 1/4% as well with the SPY. RSP, nice gap down here on the RSP. Bounced, did not get even, and then rolled over, currently down about 0.6%. So that's kind of the way the markets look intraday. As far as, well, on the daily, yeah, I mean we're pretty extended. It's like, just wait for that pullback or something. You didn't want to be buying up here. Just kind of just didn't make sense. Whether we go sideways or we, pull down, kind of wait and see how it sets up. Anyways, RSP. All right, we got a pretty big air pocket in between our current position and that 10 EMA. Same kind of deal here for the DIA. Yeah, everything's looking pretty high, pretty elevated. IWM might be filling this gap from Friday to Monday, possibly today. We don't have much farther to go there. I'd say it probably does do it. The Qs flat here the past 3 days. Could just be resting, waiting to go higher. Yesterday was a pretty big underperformance day for the Qs, mostly because everything else was bullish and Qs didn't really do a whole lot. SPY, yeah, SPY just kind of hanging out as well. Got pretty extended. Let me just run through real quick before we move on. Kind of want to see how all of the MACD and stochastics kind of look with our recent price action. And yeah, I mean, a lot of them are kind of elevated right now. Pretty highly elevated here on the Qs as well. So the Qs, even though it has continued higher from this high back in July, it definitely is making lower highs on the MACD. Could be the start of a divergence. Now this would be like a resting divergence, not like a bearish divergence quite yet. It's actually kind of set up kind of nicely because we have a pretty good sell-off. This thing does come negative, and then it has a pretty good run later on, and the Qs have a lower high across that. That would be a bearish divergence, so we might see that set up later on. We got IWM. Yeah, huge run here over the past few days there on the MACD there for the IWM. Starting to get a little bit of a crossover here on the stochastics. The DIA has been running pretty good, although I have a little bit of a divergence here so far on some of these indicators right here. Nothing crazy. I would say nothing crazy yet. Same kind of deal there with the RSP. All right, I just wanted to kind of see if we were way above certain previous MACD stochastic kind of trends, but for the most part, we might see some resting kind of go on forward. Maybe some bearishness, but it's kind of the issue with resting divergences. Typically, they're resting, and they don't really tell you the start of a new bearish movement on the market. So VIX, still not doing a whole lot. And just still floating around the 15 level. Okay. Dollar continuing to steam higher. Getting back up to yearly highs pretty much. I mean, we're pretty much there back to where we were back in April and late June. Dollar moving pretty good. GLD Gold Trust, yeah, I think it's just going to be wait. Look for the good consolidation spots. Look for the good setups. Look for good price levels. If you've been wanting to get into gold, I think we're clearly going to be getting into some pullback zones going forward. And to be pretty honest, like this top right here from this little consolidation top that we had back in August makes sense for a pretty good spot, which is also about where that 100 moving average is. I would say another really good spot is going to be later on. If we get there, is probably these highs that we put in back in April and May. And by the time maybe we get there in the future, the 200 moving average might be in that area as well. Maybe here a couple months down the line. So that might make a lot of sense there for the GLD. But I don't think you're trying to rush into any kind of pullbacks right now. I think we've clearly broken some of these recent trending high moves higher. And I think, yeah, I think we're just going to be due for a really good kind of pullback and rest. I mean, we've been on a pretty good run this year on GLD and gold. And, I mean, all precious metals pretty much. Yields, 10-year yield. Nice continuation higher from yesterday. Hasn't quite broken that 10 EMA down. Definitely closed below it and moved lower, but TNMA is, I mean, it is hugging that thing very much here over the past couple of weeks. So, yeah, moving higher. Yields weren't crazy yesterday. They weren't like doing a whole lot. As far as the 10-2 inversion, bouncing a little bit. Had a crazy drop off late last week. Bouncing a little bit. Okay. HYG, high yield corporate bonds, pulling back. I mean, this is going to be either a pretty good retest of the previous high that we put in back in September, or one heck of a false breakout. Just came, snagged probably a bunch of stop losses or triggers, and now we're going to see it move lower. I'd probably be more willing to play this bullish until it probably got through that 20 EMA. I'd have a stop loss probably back below these pivot levels down here. You could have the 10, 20, some pivot levels as well, and the 50. So if we start to get through the 20 though, I'd be like, yeah, I'm done. I'd be done. LQD. Okay, we're seeing bonds definitely drop off with yields rising, so LQD dropping. Getting back below the moving averages, kind of a quick retest. TLT, okay. TLT, quick snapback into that 20 EMA over the previous few trading days, and then past couple of trading days, it's definitely dropping off a little bit. I think I'd be probably a little bit more willing to play the HYG bullish. Maybe playing the TLT, LQD probably bearish, something like that. That'd be kind of my opinion. Across the bond prices, and anyways, just because you're seeing the strength right in the HYG more than you are the TLT LQD. As far as sector performance on the day, materials lower end of the day. Okay, that might has a lot to do with dollar. Dollar continuing to show pretty good amount of strength. Materials obviously are for the most part are priced in dollars, so the dollar goes higher. Typically commodity prices don't do as well, especially like a lot of material companies. They're multinationals. They got to get materials from all around the world, so they have different operations all over the world. So when you got to convert, your earnings currencies back to dollars, and the dollar's strong, not exactly the best thing, especially if dollars putting price on or putting pressure on commodities going lower. So materials kind of make sense, I guess. Discretionaries, utilities underperforming, healthcare, industrials, real estate underperforming makes sense. Yields are up pretty good. Energies, financials underperforming, communications in line with the market there. Tech outperforming, and staples outperforming. Not a great deal. Staples has been a pretty big lagger about the past week. As far as intraday performance, we got materials, industrials at the lower end. Utilities also lagging behind real estate as well. Healthcare, energies underperforming. Discretionaries underperforming a decent amount there. Communications kind of in line with the market. And then financials, slight outperformance. Tech and staples outperforming on the day.